Welcome, everyone. This is an exciting topic, corporate culture. But what exactly is corporate culture? When we think of culture in the traditional sense, it relates to customary beliefs or practices, encompassing visible elements like customs, artworks, rituals, dressing, the way people communicate and behave in public. Hidden and more difficult to detect and deal with is the way they think, teach their children, relate to power, or relate to others. Some refer to cultures of peoples with terms like hardworking or disciplined, which may be characteristics enabling their economic success. How does this apply to corporates? In corporate failures, though, sometimes they refer to a bad corporate culture, which leads to things like toxic environments, poor morale, and retention. So given that this is an investors forum, we will delve into how important is corporate culture to investors. I hope this session can share some light on this topic. We are very fortunate to have with us on our panel today experienced practitioners in their fields, and let me introduce you to them. First off, Mr. Lance Ang, lecturer in the School of Law at SUSS. Ms. Lee Su Shen, associate editor of the Business Times. Ms. Serena Teo, Chief Executive Officer of Capital Land Ascot Trust, and Mr. Melvin Tan, private investor and founder of the Hinterland Group. So let's start the session off with perhaps a first question by me, but feel free to start typing any questions into the Q&A box. What does corporate culture mean today? So Serena, perhaps you can shed some light on what this means to you as a CEO. Over to you.
Thanks very much, Hao Yao, and good evening, everybody who's decided to join us instead of having a very leisurely dinner. It's an important topic actually, and I think it's easy to come up. It's perhaps easier to come up with like business strategies than it is to really inculcate a culture. But a culture to me is like the heartbeat of a body, right? And when you have a culture, right, then execution, people all come together a little bit, more coherently. So my CEO actually, I picked out some of the quotes that he mentioned. My CEO actually said sometime last year, without the right talent and culture, even the best strategy cannot be executed effectively to achieve sustainable growth. And as a company, I think that's what we want. We want to be able to achieve sustainable growth, not only for our investors and the shareholders, but also within the company, the employees and the people really working hard to achieve that sustainable growth. Right, and I think many of you have also heard of this other saying by Peter Drucker, which is, culture can eat strategy for breakfast, right? And I think that's really, at the end of the day, what drives a company to success or otherwise, right? In a world today whereby it's changing so quickly, it's fast-paced, our ability to be able to adapt in certain aligned values, while at the same time being open to diverse views, valuing each other with respect and all that, that becomes, to me, I think, the fundamental tenets as to how we would be able to grow, right? So being able to keep pace with the environment, be resilient, stay connected as we move forward, I think those are really tenets of what drives a corporate culture and at the end of the day, the success of a company.
Thanks, Serena. So yes, culture is the heartbeat of the body. So let's get to Lance, who's lecturing at the School of Law. What does culture mean to you?
Yes, thank you, Hao Yao, and thanks everyone. Yeah, I would agree with what Serena has expressed. And well, I come primarily from a legal perspective as a legal academic. So the thing about culture is that, yes, it's quite hard to describe, but it's also quite hard to implement, as it were, through law. So we have the Code of Corporate Governance that seeks to set out that purports to set out the best practices for listed companies, but the code itself doesn't really contain many references to culture. In fact, it essentially provides that the board of directors is it is the board that should play a primary role in putting in place the desired organizational culture. So essentially, culture is very much dictated by the board and reinforced by corporate governance structures and practices, and of course, the people that make up the company. So these would determine, for example, the extent to which decisions are made collectively or otherwise, and it would also be, of course, shaped by social norms. So, I mean, I did write about this previously a few years ago, and I would say that corporate culture in places like Singapore, very much. I mean, unlike in the US, for example, I mean, I would say Singapore's corporate culture, and I'm at the risk of generalizing here. It emphasizes very much on interpersonal hierarchies, long-term stability, non-confrontation, as opposed to individualism and risk-taking and short-term interests that we see in perhaps the US. Um, and Yeah, so I would say that in summary, th- there are limitations in terms of what the law can actually prescribe in this regard. So as I said, there is very minimal references in the Code of Corporate Governance to culture for good reason, because I mean, essentially, there's only so much that legal rules can actually prescribe in terms of culture. I guess the idea here is that it very much stems from the lessons learned from the 2009 financial crisis. The idea that risk-taking corporate culture caused the downfall of the big financial institutions, and the idea that corporate governance should shape the right culture. I guess that is the starting point to our discussion, but of course, whether how this plays out in practice remains to be seen. Yeah, thank you.
Thanks, Lance. So the country where company operates, right? There's social norms and perhaps the environment could be hierarchical, non-confrontational. So it's very different in every country, it appears. Sushen, as a business editor observing trends, how do you see corporate culture being perceived by the markets, by employees, or by the public, your readership, perhaps?
Thanks. Hi, everyone, and thanks for having me. I wanted to maybe pick up on the point that Lance had made, which was, very interesting and sort of talked about, the financial crisis and so on. So maybe a bit from my perspective, I think some of it has changed over the years. I mean, perhaps, yes, it was very much, the days where we had all the stock options, and it was, I think, quite going for growth and going for profit. I think there was quite a clear culture, maybe, then or clearer, where people really did focus on getting the profits and so on. And I suppose I would think that over the last few years and so on, I think there has been a shift in corporate culture, as I think both Serena and Lance have said. I think there's a bit more about collaboration. That's my sense when I talk to companies. It's definitely articulated. Collaboration. Communicating, being inclusive, being very very respectful of differences among your colleagues and so on. Maybe leaders, in the past, yes, very much, on that growth trajectory. Of course, still very much so, but I think having to talk about a culture of perhaps, trust, communicating with employees, being very authentic. So I think I do see some of those shifts in the business world.
Thanks, Sushen. So coming to Melvin, you're a private investor and family office founder. How important is culture to you when you invest? And how are you able to assess a company's culture?
I think that in this new world whereby connectivity, blockchain and the internet world, right, becomes more and more prevalent. When you look at the corporate culture today, I think it is the invincible architecture that defines how a company truly behaves, especially when no one is watching. For me as an investor, right, it's not just about the words on the wall, but the consistency of what the leadership says and what the management does and how employees respond under pressure. So culture actually to me is one of the best indicators of sustainability. It tells me whether a company, say, will survive beyond a single product cycle, or even, as you know, especially in SGX, there's a lot of board changes and leadership changes. So whether that the culture can help also in terms of leadership change. So I just want to share like three things that I look at when I assess the company's culture before I invest. So basically, to me, three dimensions, right? One is about leadership alignment, whether the founders or the management are genuinely driven, mission driven, or just market driven. I also observe like how they talk to people and their customers, where no media or investors are present, not at EGM, not AGM, but when they are just naturally doing their work. That gives away the authenticity of the leadership. Number two, the second dimension is actually a governance in practice. I look for evidence of ethical decision making, whistleblower protection, open communication. As some of the SIAS members know, I've been involved in a lot of turnarounds and judicial management situations or SGX. How they handle the mistakes. When governance structures are broken and all that, how do they make a comeback? I think all these are very important, and culture therefore becomes the heartbeat, right? And I think the third thing is actually the energy, the employee energy. Numbers don't lie, but the people's tone in the meetings, for example, say even more. And I spend a lot of time talking to mid-level managers and staff, and they usually would tell you the kind of company that they are buying into, right? You can even see like small little things like how frequent people take MC at work, and things like that. And you can see from the tones, if they speak in pride, where the ownership is, especially. I think a company with a strong culture attracts better talent, retains customer better, and able to get more repeat sales, word of mouth going, all that. Conversely, a weak culture, governance failures or capital destruction. And we have seen so many big scandals, even globally and even locally. As of late, you saw so many, and some of them are very big companies that actually went down. So I think what's most important is that we need to basically be very, very clear about the company's culture. I think it's very helpful when we invest.
Thanks, Melvin. So culture is very important to investors, and I hope everyone was taking notes. I think that was quite heavy, a lot of material and good pointers that Melvin gave earlier. But how much influence really can shareholders have, on shaping corporate culture through governance and board engagement, But why don't we start with Serena, Could you share perhaps how management and boards respond to investor expectations after hearing from our investor there?
Yeah, I think at the end of the day, it's really being very forthcoming, right? Our investors, I like to think that our investors and shareholders, essentially, we have an aligned interest. The aligned interest is everybody wants the company to be able to do well, right? So the alignment of interest is important because then, it fuels that conversations, right? Because the agenda is the same. So really being open, being accessible through platforms, for example, the SIAS dialogue, being open to taking questions during any sorts of results or business update releases, timely release of materials or any developments within the company. I think these are all news that investors will appreciate, right? Because they're not in it with us, a day-to-day business. So I think when the business has like meaningful type of developments, by putting the information out there in a timely manner, timely, clear, succinct, manner for investors to be able to digest and read about it. I think these are all proper possible avenues for us to keep the engagement channels open.
Okay, so about disclosure and communication, and how about Melvin mentioned areas where you collect feedback, perhaps even through whistleblower. I mean, is whistleblower policy important, and how do boards really get that kind of feedback?
Yeah, I think for most of the companies, especially those that are publicly listed, these are all hygiene factors already, right? Which means it is expected that all companies will have a whistleblowing channel that reports directly to the independent audit and risk committee. All reports go directly to them, not going through management or within the company. I think all those are given already, and every single whistleblowing report will be investigated separately by an independent person, right? So I think I didn't mention that because it's really hygiene factor. You do need a 360 type of a check, right? The other would be, I think Melvin also mentioned, what happens, how do management act when they're not being watched, right? I mean, we're all quite open here, right? Singapore is also not very big, right? And there are always various discussions with business associates, so essentially it is a fairly closed circle whereby any sorts of discussions or reputational of any reputational bearing actually comes back fairly quickly. Yeah.
Thank you. So Lance, how about through shareholder rights, under the law or under stewardship codes or codes of governance, and that also ties into AGMs, because shareholders not only question, but they can also put up resolutions or call for EGMs, and is there also other jurisdictions we can kind of look to where they have such practices that enable investors to kind of shape corporate culture?
Well, yes, thanks, Hao Yao. Yes, definitely. Before I start on other jurisdictions, I mean, I guess the idea there's been this trend in not just in Singapore, but in other jurisdictions such as the UK, US, toward greater shareholder participation in terms of influencing, as you said, corporate culture and other aspects. Again, I believe this stemmed very much from the financial crisis. So the idea behind stewardship codes, for example, were that they actually started in the UK. UK stewardship code was the first stewardship code. The idea was that there were ownerless companies in the UK. In other words, shareholders which didn't really exercise their rights, with the result that management were given a free rein in terms of how they conducted business, which led to obviously a lot of risk taking. So the idea here is that shareholders should play the role of a watchdog and to play a greater stewardship role, as the term states. And of course, they do so primarily through exercise of shareholder rights and AGM engagement and so on. And this is also reflected in Singapore, even though the stewardship code here is not binding. But I would basically say that, I would have to say that I am quite skeptical in this regard as to the, again, from a conservative legal perspective, it's quite obvious that shareholder influence at this point still plays a secondary role as opposed to a primary role, insofar as the companies, of course, run by the board and the management and not by shareholders. So as what Serena has really touched on, it's very much dependent on the board's willingness to engage with shareholders, because there's asymmetric information. In other words, the board knows a lot more of what's going on in the company, as opposed to shareholders. Shareholders, they don't know. They only know what is disclosed to them by the board. And yes, well, like I said, there's this trend towards more shareholder participation, at least in law. But I would say in terms of practice, apart from, of course, the good work that SIAS does, Singapore doesn't generally have the same level of shareholder activism as compared to, for example, the US and UK. I mean, the levels are completely different. It's not meaningful to even talk about shareholder activism in the same sense that we talk about shareholder activism in the US or UK, for example. So I would say that again, it doesn't really play out in practice. I would say shareholder activism here primarily occurs on an ad hoc basis in private, and of course through the work that SIAS does. So again, I'm hopeful that shareholders can exercise greater influence, as it were, on culture, but I have yet to see this in practice. And of course, I would be curious to know from Su Xian whether there have been examples of this as reported in the media.
Okay, thanks, Lance. So essentially, SIAS has to work harder. Thank you. I hear you. And maybe I'll just jump to Melvin because Lance was talking about, the legal structures and may be quite limited into how we can use these legal structures to shape culture. What do you think through resolutions and votings and EGMs and such? Do you think shareholders are able to have an effect on the company's culture, Melvin?
Yeah, I think he brought up a good point because from my experience, the shareholder activism level in Singapore is very alarmingly low, right? And I can speak from experience because I've been involved in 2 or 3 board fights in Singapore, right? And really the reason for that was because the board was basically not doing a good job, or there was some form of mismanagement, right? So I decided to take matters into my own hands and basically rallied the shareholders. And in Singapore, for those of you that do not know, if you actually are able to garner at least 10% of the vote of the total paid up shares, right? You are able to call for an EGM. You're able to requisite a meeting, and it is the board's duty. If shareholders representing 10% actually requisite a meeting, they have to call for a meeting. And if they don't, we can actually proceed to call for our own meeting. It's actually inside the Companies Act. And many times you realize that they actually require a leader. And a lot of times I feel that people, associations like SIAS play a very important role, because without such leadership, it's very difficult to galvanize all these shareholders to come together, right? And to be able to make meaningful enough stance against any errant board of directors or even management, right? So three viewpoints from me. Basically, one, through dialogue, right? I believe that meaningful change doesn't just come from shareholder activism alone, but also in terms of constructive management, when constructive engagement, when investors actually are able to speak to management, not just about the quarterly earnings, but also about, for example, succession planning, values, and so on and so forth, right? The next thing is that although our vote is very small, but our vote actually signals to the management against certain resolutions, for example, that if we are not supportive and we vote, it gives a signal to the management, right? And I think last but not least is actually the long-term stewardship, where I think short-term investors always will chase for the price, but long-term investors is about purpose also. We are here for the long run. We want to see the company grow and excel, right? So the long and short answer is that in Singapore, the culture of shareholder activism, unfortunately, is not very strong. But we are trying to improve, and forums like SIAS actually helps to make the culture better.
Thank you, Melvin. So I'm sure you're making a difference today by voicing your points. And actually, I like your 3 points. You always have 3 points. And so one takeaway is definitely that shareholders should vote when they are able to stand up to be counted, right? Okay, we hear you at that as well. So how about the media, Sushen? How do you think the media can kind of amplify investors' voice? And do you think that media actually can also help in shaping culture?
Wow. Maybe I would say that, whereas Melvin, encourages all the investors, I do find that the quality of questions, right, by the investors nowadays is definitely much higher, which really gives media a run for their money, I feel. Maybe the investor to me, I feel, is quite knowledgeable about the the particular stock. Maybe for media, you would have to cover really quite a wide range of stocks. Whereas if an investor is vested and of course interested and is really able to do a deep dive, I think an investor really can play that very important role. They would really have followed the company over many years. I feel that nowadays many of the investors are definitely very well versed and certainly are very knowledgeable about the company that they have. In terms of how media could be amplifying this shareholder voice, I think it's really timely that we have this governance week and so on, and I do encourage all the reporters, and I feel that as reporters and so on, we have that privilege. We are able to talk to management and so on. It's really something that the media should has a duty to sort of articulate the issues, speak up for the investor. I think we really still should go through our commentaries and so on, and I think that is one way we get our message across. Maybe something towards what Lance had said about shareholders and so on. I think one particular incident I think has came to mind. I think that was already some time ago. This was, if I may mention, a Sabana REIT, and they wanted to have an internal manager. So I think in general, quite a lot of most of the REITs are all managed by an external manager. This time round, they had because of costs and so on, they talked about getting an internal manager. That one really was driven, I would say, by an activist investor of a fund, and they really sort of worked at it and so on. Well, whether it is right or wrong, I think only time will tell. As they have certainly spent millions, actually millions in this internalization process, and it is only I think it started in 2023, and it is only just recently that they have really done their in got their internalized manager sorted out lah. So quite a sort of landmark move in I think Singapore terms, but still it did need an activist investor who really tried to push through. I think media here, I think we did play a role because we definitely reported it, we explained it, it was fairly technical and so on. So I think media definitely had that role. But I think perhaps what really comes out of all this is that it requires shareholders, maybe someone as the leader. I think as Melvin said, the media to also come in. It is really requiring the whole stakeholder community to perhaps effect some change. Yeah, that's where I would see it.
Hey, thanks, Sushan. Perhaps we move on to another topic now. ESG, right? And last few years, it's been a big topic, talking about environment, social and governance. And how does that all fit into culture, should it be part of culture, how we take care of the environment, or I think we spoke a bit about governance. Perhaps also we can talk about social, and maybe we start with corporate, right? Serena, does
Yeah.
embedding ESG in your operations and leadership behavior part of what you all do in the
Yeah,
company?
actually, yeah. I mean, ESG is a term that was coined maybe I think in the last 10 or 20 years ago, right? Maybe, but the considerations under the factors that are that comprises ESG are actually not new, right? I mean, we're not a business that is in isolation. At the end of the day, we are a business that operates within our environment. There is impact from our business to communities, to people around us, to businesses and all that. So that impact must have been measured, or must be considered as we for the sustainability of the business. But the ESG framework does give the framework to be able to look at the various tenets, right? So ESG one would be environment. More often than not, it refers to the physical environment of our businesses. Second, on the social part, is really what is the impact of our business? Does it have to people, right? Either people working in the company or communities that we would impact. And then, of course, G is really how the company is governed, the governance tenets that the company would live by. Right. So it is, to me, even before the term ESG is coined, it is already very much part and parcel of most companies, at least companies that really are interested in sustainable growth. Right. So that's why for CapitaLand, it is also no different. I mean, we do have quantifiable targets, so that people can see that we're not just brandishing ESG for the sake of ESG. We do have targets that we're trying to work towards. They are by no means easy targets to work towards, right? Which is why we have 2025 targets, 2030 targets, and 2050 targets, and all businesses within CapitaLand is really working towards it. So I will give an example. I think E is fairly straightforward. It's usually measured by electricity, water consumption, green certificate, net zero. These are fairly hard targets that can be measurable, right? Social, I think, and governance again is also fairly measurable. The governance standards of a company, as sometimes I think is a little less covered. Right. So to me, S is important because it measures at the end of the day diversity, inclusion for the company, equality for the company when it comes to both internal employees as well as the business partners that we work with. Right. So very clearly, if you look across CapitaLand, gender equality is important. Being able to have a voice, which is something that we operate within the company. If you're in a meeting, regardless of seniority, if you have a seat at the table, you have a voice at the table. Being able to be open to diverse views, agree to disagree, and then after that, really considering all views. I think those are important. If you look at our boards, we always have a very good balance of independent as well as non-independent board directors, good profile, right, of people who can add value across various industry ages as well as gender. So I think those are really tenets that are important. It keeps, I think, employees going also because, employees can then see that they have a growth path within the company. Yeah. So it's all good for sustainability of the business.
Thank you. Yes, I suppose that your communication of the ESG, and I'm also glad that you mentioned how it can be kind of distilled throughout the organizations, even through the employees, right? And not just outward facing, so to say. Lance, on the, you look at our compliance, and reporting, for example, sustainability reporting, and listed companies are required a separate report, and then of course there's a big governance report in the annual report. And what do you make of all this? How does this actually shape culture? And can you actually, read or kind of have a sense of the company's culture through looking at these legal and compliance requirements?
Yes, thanks. Well, specifically, I would say culture, even though it's very hard to define, it technically falls under the S or the social of ESG. And as what Serena has mentioned correctly, that S is really give an afterthought, I would say, in Singapore. I would say the emphasis thus far has been on the E and on the G, because of course there's a whole lot of emphasis on the environment these days. But more broadly speaking, ESG roughly translates to sustainable long-term value creation. That is the idea behind ESG and sustainability. The idea that the company should act toward long-term value creation rather than short-term profits. And this is, of course, manifested through the disclosure requirements that have been enforced under the listing rules for some time, but it's been beefed up. And the increasingly stringent disclosure requirements are intended will be coming to force under the SGX listing rules, including the requirements for assurance and so on. So, well, again, what is the impact of these rules? It's a bit hard for me to say at this point because it's still early days. Whether it can translate to tangible cultural shifts, or whether it will again become more of a box ticking exercise in a similar way that companies here treat compliance under the Code of Corporate Governance, which is comply or explain. So again, there are many skeptics, of course, towards ESG, to be very frank. But it essentially boils down to whether these disclosure requirements that companies have to make, again, there's to me there's very little disclosure requirements with respect to S and culture, as I recall. So again, this is lacking here as compared to other countries. But even with these disclosures, whether this can actually translate to different ways in which companies act, it really boils down to how this leads to a change in board behavior and investor pressure, which once again goes to the issue of shareholder activism that we covered earlier. Yeah, because again, disclosure is the second best solution, as it were. I mean, the idea is that it will sort of lead to a change in corporate behavior. The fact that you have to disclose something would lead to a change in corporate behavior. I'm not entirely sure whether it's as clear as it is. But I mean, I guess one can only that remains the intent of these regulatory requirements anyway. But I guess one can only be hopeful. Yeah.
Thanks. So, Melvin, as an investor, and you go through the ESG aspects of the company through its annual report and and sustainability report. What does it mean to you as an investor? Do you feel that these required reports are not just a box ticking exercise, but actually reflect trust and value to investors of what the companies practice?
I think there's a story I like to share, right? So during the COVID period, sometime in 2020, a lot of companies were in need of capital, and a lot of these annual reports came to our table. So as a fund manager, we have to diligently look into these reports, right? And as per SGX guideline, a lot of the ESG component has to be inside those reports. And it's quite alarming sometimes when I realize that some of these companies are just using templates to copy and paste into their annual report. So it's actually quite sad to me because as a fund manager, right, ESG is not just about ideology, but it's also about the credibility of the company. And so I think for me, it's just three main points. One is trust through transparency. Right, the ESG transparency actually builds the confidence, not only internally within the company, but also towards people like us as external stakeholders, the fund managers. We don't expect any form of perfection, so to speak, but what we do expect is the honesty from the company. And by putting templates into the annual report, it's just not going to help. Right, companies that can basically explain their gaps and plans can actually earn far more investor respect than those that just produce some glossy success sustainability reports with no accountability whatsoever. The second point is actually going back to culture, right? The main topic. I think this can be a hidden multiplier, like I mentioned. ESG is actually strongest when it's embedded in the culture and not through marketing. Because a lot of people, when they talk to me, they sort of like pitch ESG to me as though it is marketing. It's actually very different matters. And I get very worried when people say ESG is a form of marketing. Right? You hear this a lot of times from marketing managers using ESG to make the company look good and so on and so forth. But at the end of the day, when staff at every level know that sustainability and ethics matter to leadership decisions, it actually becomes self-reinforcing. Right? Investors can actually sense that alignment in everything from supply chain conduct to even to the boardroom. So I think that is very important, right? I think the third point is actually the risk and resilience, right? More often than not, I realize that ESG-minded companies, right, tend to survive shocks better, whether reputational, regulatory, or operational. For fund managers like us, it's not just about good ethics, but it's also about it's also actually good economics. So ESG to me actually provides a early warning system for governance and certain forms of integrity risk.
Thanks, Melvin. And so companies must be genuine, shouldn't use it for marketing, right? But Sushen, when companies do press releases or, how do you, kind of separate the wheat from the chaff, that they are not just marketing, but really delve down into whether the company is genuine, in Melvin's words?
Yeah, the BT does have a weekly ESG page, but sometimes I do feel that, readers are not, that they know it's important, but somehow to really get them to look more closely at ESG, I have to say I think it's a challenge. It's a challenge. Um, how do we separate it? I think it does require quite a fair bit of deep knowledge. Um, and we've got a couple of people who do look, more closely into it. Maybe I will just share one sort of example and something that actually we did write about. So really, SIA, right, has quite a fair large amount of emissions. Okay. And therefore, you would say, oh, well, it's not performing that well because it does have those emissions. But one of the things is that it an airline it's very difficult. It's in a hard to abate sector. It's not something that you can easily do, right? So how do you mitigate it? So of course they're doing things like the sustainable aviation fuel and so on. So yes, you can definitely try and do it, but it's all early stages, it's very expensive and so on. So I think some sort of that understanding is to say that at the end of the day, we also want to have our airline, I suppose, and therefore it's something that you might have to live with. So I think some of that, understanding of your priorities, the business strategy, and so on is important in trying to understand where this ESG is coming from, and maybe how successful yeah a company is at really trying to mitigate. But maybe can I just make one point about when really you can see that it translates a bit into dollars and cents. I think that's maybe how maybe more investors will also get more interested, and we can write about it and go a bit more into detail. So we came across some companies and they actually had to move, and that's really because their current office does not meet the standards of, say, your head office has already set some, target for the emissions. And therefore, there are quite a number of old buildings in Singapore that do not meet these standards. So I think there is a sort of dollars and cents, and I think if we can also sort of get that across, I think that's where we will also see some impact, and I think we can get investors, more sort of vested in this ESG. Of course, at the end of the day, ESG is important. I hope that we can really move beyond the so-called disclosure for disclosure's sake. Really the substance over form. I hope we can move that, but it certainly requires a certain amount of knowledge on the part of people who do write about it.
Yes, and hopefully we get to see more of it, and we should all read your weekly
Yes, we
column,
yeah,
and
yes.
investors can learn more about ESG and how important it is to them when they invest, right? But perhaps we'll take on a general question at this stage, and one of our attendees said he's interested in red flags. So perhaps we can get onto the topic of red flags, or even if your example is green flags, that's good too, right? That's a good signal for investors. Who would like to start first? Maybe we since we've gone one round, Serena, you have any, where companies green flags, or where can investors look to, in which part of the reports? I mean, there's so many reports and materials that investors go through. Is there anywhere we should focus in and zoom in on whether there could be a red flag or a green flag for this company?
I think it's not so much one particular report or one particular section. I go back to a little bit of the views or the ideas that were offered by Melvin, right? I think it's really when you assess a company or you assess the management running the company, it's actually a series of consistent behavior that you are looking at, right? Beyond the strategies and the execution and all that, it's really a series of consistent behavior, values that govern, that trust, or that would determine whether there is an investor trust or not. So, like I said, it's not one particular report. I think as an investor myself, I would really look at whether disclosures are frequent and clear. Whether management go above and beyond what is mandatory checkpoints of disclosure to engage, right? And really the overall conduct of sessions, whether it is an AGM, EGM, or, one of these sessions. We do many sessions, for example, with the help of partners to engage our investors or potential investors who would like to know, this space a little bit better. I mean, given that we are a REIT with properties, properties is actually fairly accessible, right? So other than this session, which is done by SIAS, there was another one that just, it's an ongoing session. It's called the REITs on the Move, right? So SIAS, Revitas, and a few other organizations, including SGX, they essentially organize these sessions on Saturdays to allow investors who sign up to really engage as well as see the properties of some of these REITs. Right, so just this Saturday, today is Monday, so just 2 Saturdays ago, we did our second run from CapitaLand Ascott Trust. We brought investors to one of the co-living properties that we have in Singapore. That's the Live One North property, right? And all the other CapitaLand REITs are also going, on our second run soon. This Saturday, I think there is Land Lease and Capo REIT, organizing. Next Saturday, CapitaLand Ascendus REIT is showing off Geneo together with OUE REIT. So I think all these are above and beyond, right? And they are organized platforms, and I'm actually quite happy. So again, earlier Sushan said that she observed that investor questions are getting very good. I do agree with that. right? I have only been CEO for about 3+ years, but overall, in the last 3 over years, the questions that I have been posed to by investors, they are getting very, very good, right? So it does help to move conversations along. The second is, I think it is helped by all these various platforms. I do see a lot more of these platforms and opportunities for investors to be a bit closer to the businesses. And I think all these are, means to helping an investor get a better feel of management as well as the company's business.
Thank you. So I'll take it it's a green flag that when companies are sincere in reaching out to investors, and as you said, above and beyond the minimum, right? And I would take that as a green flag as an investor. Will Melvin or Lance want to chime in on this red flags or green flags that investors can look out for?
I can comment on the red flag. I can share some red
Please
flags
do,
lah.
yes.
Okay, so I don't know where to start. There's so many things to talk about when you talk about red flags, right? But I think there's a Chinese saying which I always subscribe to when I evaluate companies. It goes by 上梁不正下梁歪. That means when the top is not straight, the bottom is crooked. So I often will always look at the leadership, especially on the board. Be very careful about celebrity style kind of CEOs with a lot of showmanship, showing off the Bentleys and Ferraris and all that. Those companies that did such things basically already faring very badly on the SGX already. These are actually companies owned by actors and directors and all that. I don't know why, but they didn't turn out too well. So there's a leadership disconnect. When the CEO or board says one thing and publicly but acts differently behind closed doors, then something is really wrong. I think the second point is also on red flag to me is actually basically toxic or fear-based culture. You start to realize that is, for example, high staff attrition rates, negative reviews on Glassdoor or LinkedIn, or complaints of recently you saw 12 cupcakes, although it's not listed, but they don't pay their employees, complaints of such, right? And when decision making is driven by a fear or personal loyalty rather than merit, then roughly something is wrong. I think the next point is on opaque governance, right? So when you see minimal kind of disclosure around the board composition or remuneration, everything is like in Malay called wayang, is for show. Then that is also something that we have to be very careful about. Last 2 points, I think one for me is short-term outlook, basically obsessive focus over quarterly results rather than the long-term strategy of the company, right? This is also a signal for me that is a red flag. And then, like I mentioned earlier, I call it a symbolic ESG, right? When sustainability reports that read like marketing brochures and, for example, no measurable KPIs. Right? Everything is just talk only, but no substance. There's no KPI to basically follow through. Then I call this greenwashing, basically grand claims with no verified progress whatsoever. So all these are some of the red flags.
Thanks, Melvin. So investors have to suss out whether the company is acting or wayang. And I think there's also a very good suggestion going on, forum sites and LinkedIn and such. Well, it's not so much whistleblower, but it's like chatter, right? You can hear chatter about the company, and when there's smoke, there could be fire, right? So thanks for those points. How about Lance? If companies have legal cases outstanding and such, does it kind of reflect on the culture of the company?
Yeah, I mean, I suppose so. But I guess on your question, where can investors look at? I mean, the problem is that, if there are red flags, they're not likely to be disclosed anyway. It's hard, therefore, to actually ascertain as an investor from what is not disclosed. But one place to start, I suppose, would be the risk disclosures in to the extent that companies make them, including impending lawsuits and as you mentioned. But of course, I would defer to Serena and Melvin on this. I mean, there are many aspects that can determine whether a company is worth investing in, not least whether the stock in question is overvalued, and we know there are lots of overvalued companies in the US right now. So, yeah, so there, I mean, I guess that's the issue. So I think primarily it's really a matter of whether the company has got a good track record, I suppose. And I would largely agree with what Melvin has said. I think that those are the useful points to note. Yeah.
Thanks. And Sushan, you've engaged companies for, I know, several decades now, and I'm sure you can tell if a company is a red flag or not. Perhaps, I don't know, the quality of the staff you engage with, or direct quality of directors, or kind of how they are giving you information and such. Maybe you can share some of your personal experiences.
No, I'm not going to tell you about my terribly performing investment portfolio. Obviously, this this didn't quite work out. I think I'll just pick, and maybe from I think my fellow guests. So some of it is that it really does boil down to the CEO, right? How he's being remunerated or how he's being incentivized. Some of those things I think you can see. Is high CEO pay necessarily a red flag? I don't think so, but it is also one of the things. So it's just all the things that you sort of put together. Um, it's something that you could consider. It's something that, at least, that you can see. Some of the stuff. How the company is doing, yes, unless you're kind of on the ground, you've heard the chatter, you may not know that, okay, they're trying to ship stuff to this customer and and so on. No, you may not get that much financial information. So I think, yes, maybe one, the sort of pay, the turnover, yes, if the CEO does change, senior management also changes quite often. I think these are some sort of relatively easy flags that red flags that would stand out. um and also, I think, do be careful about, I suppose, sometimes when they get a lot of publicity, and we've also said that sometimes when you've been featured in the BT, that may not be really that good, because we feel that, oh my gosh, a bit of the kiss of death. But sorry, jokes aside, it is about, sometimes, I'm not sure, vanity or so on. So when you get too much publicity, and perhaps you also tend to believe all the good stuff that is being said about you, I think media also have that sort of responsibility. So I'm not sure. We build some people up, and maybe sometimes they do crack a bit under the pressure. So I also think that someone who started a certain way, but with under that pressure of targets of living up to all this, the fame and so on. Yeah, you may have this tendency to, I suppose, yeah. Well, so some of it, at the end of the day, still boils down, right? It is about substantive. It is about the ethical makeup of the CEO. At the end of the day, I can't really see. I don't think investors can really see. If you do have your interests of your investors at heart, I think this is something that will show through. Yeah. It all depends on the CEO and the shareholder. I hope that we are not, we can get more of these investors and leaders and so on, who really do put shareholders' interests at heart.
Well, that's a good segue into a topic that I wanted to bring up, and you mentioned, reward system, remuneration structure, bonuses. Can this be used in corporates to shape culture, or, perhaps as investors, we can read the reports on remuneration and kind of get an idea on the culture of the company. Serena, do you have any view on this?
Yeah, absolutely. I think remuneration is a way of aligning interest, right? And for us, typically, after a level of seniority, a certain proportion of our pay will be paid in shares, right? And it doesn't get paid off in one tranche. It actually gets vested over a period of time. So that's one. So today my pay is about 60/40. So 60% in cash and 40% in shares. And the share component is actually paid out over a 3-year period. Right, so that's one. Second is really, I think what's more important is the KPIs, right? That I need to meet in order to get a certain level of compensation. It's really market driven, right? So it's, for example, how the REIT that I run compares against the overall market, how the REIT is performing in terms of distributions, for example. And then after that, there are other KPIs, including, for example, attrition of my team, whether how strong the bench strength is, whether there is succession planning and all that. So it's actually a series of, I would say, a balanced scorecard that has both short as well as long-term measures within the KPIs that I need to meet in order to get a certain level of compensation. So it's actually fairly open. I mean, given the SGX requirement now for all CEOs compensation to be disclosed down to the dollar, I think that has actually aligned. I think it's made it a lot clearer for investors to be able to see how we are remunerated, how much and the proportion of our compensation. I mean, at the end of the day, I think compensation is only one part of the job. I mean, while it is important, I think most CEOs in businesses, right? Like I mentioned, what we really want to see is sustainability in the company. What that means is really that you have growth in the company. You're able to articulate not only short-term results, but being able to articulate a plan that can contribute to the sustainable growth of the business. And that really, at the end of the day, benefits all parties, whether it is shareholders, investors, employees, or the company that's running it. Yeah. So I think it's a good alignment of interest.
Thanks for sharing. And Melvin, you're on the other side, you're reading the report about CEOs and directors' remuneration and the structure. Can you tell anything about the culture of the company by reading this report?
Yeah, I think at the end of the day, for us, we are more concerned about companies paying enough to C-level management and also to certain extent the board. Because you need to be able to be competitive in terms of your employment. And if sometimes you don't pay the right dollar, you may lose very, very talented people to other companies, right? So we always do proper benchmarking to check across the board whether a particular listed company is paying market rate to start. Because if the market rate is too far away, it can be quite a concern for us.
How about on the other hand, is there a possibility that companies are overpaying and do you think will affect the culture?
Well, in the sense of if it's overpaying, then definitely it will affect the culture. Okay, because my view is that you not only you have to balance out your capabilities, right? I think obviously meritocracy is very important, but at the same time, sorry about that. At the same time, we must make sure that the entire company is well balanced and the people are there also because of and serve in that particular industry or company.
Okay, thanks, Melvin. I think we can move on to this another question by attendee, and he's referring to value creation. Is value creation should that be part of the culture of the company, and there's been more examples in other countries like Japan, Korea, where there is more pressure to kind of create value for your shareholders, doing buybacks and distributing cash or selling assets and so forth. Do you think that that should be part of a company's culture? And if so, what's the best practice for this? Serena, do you have any, would you like to shed some light on this?
Yeah, actually, they're all I would say all encompassing. I mean, share buyback, divestment of assets and all that. Those are all means to an end, right? So at the end of the day, the end in mind is really what we want to have is a profitable company with sustainable growth, right? So and I think all shareholders want to see that, right? So essentially, I would say that in short, yes, all businesses should create value. The how to create value, essentially, there are various aspects, and when executed right, that value will be created. And what you want is to be able to create value that is above what, the normal market is creating. So that's how I would benchmark. That's why I mentioned earlier, whereby, my long-term incentive is actually based on not only how well the REIT that I'm running is doing, but how well it is doing relative to all other S-REITs in Singapore, for example, which is then my peer set. Yeah.
Thank you. So, Lance, do you have any view on this? There's been these changes in regulations and such for the exchanges and there's also discussion of that here, right? There's also EQDP that's going on, supporting the market, and I think Singapore market's also looking at overseas countries and exchanges and regulators to see how they can encourage their companies here to create value. That have you noticed any of these?
Yes, thanks. Well, I would say the reforms, the EQDP reforms are very much to boost the equities market. I guess the idea of value creation is somewhat it's related, but somewhat it's a different consideration, I would say. And the question posed by the um Victor Cherian with respect to share buybacks, that's really quite interesting because share buybacks, and I also wrote about this recently. It has been quite controversial, as some of you may note, in the US, insofar as there have been lots of critics that it actually does not create long-term value because it's basically companies wasting money that could have been spent on other things such as R&D, employment, investment, and so on. And there's been a lot of talk that these share buybacks are really they're just meant to boost the share price. So I don't have really a firm view on this, but the idea again behind long-term value creation is really what are the steps the board is taking toward um, creating a sustainable, basically having a business model that creates sustainable profits over the long term. And again, on this, it's quite hard to actually set this out in in law, as it were. So I think it's very much an issue that is influenced by business practices and so on. So I would very much defer again to Serena on this, who has made quite useful points in that regard. Yeah.
So Melvin, I mean, you're an investor and you see lots of companies, as you say, every day that different companies coming onto your table. And, do you notice any companies who have really got a culture of value creation for its shareholders? And maybe do you also see companies who are kind of just a bit aloof in this area and just leave the share price be and, not doesn't seem to be much happening to the company, just kind of business as usual?
I think that okay, so I speak in terms of the SGX listed companies first, right? So it's very clearly that when you look at the SGX listed companies, right, obviously you have all those very, very good value creators, right? But they are very, very well organized, very well managed, the bigger companies, Singtel and all those companies like CapitaLand as well. On the other side, you have a group of companies that are very, very much family kind of structure, right? Some of them owned by families, some of them owned by just one or two shareholders. And very often, these are the companies that have problems, right? Because they don't incorporate and follow the best practices, right? So we try our best as fund managers. We do see certain value in such companies, right? And it's very much also for the investors to walk hand in hand with those with such companies, the management, as well as the board, because they may not have the right tools at their disposal, right? And so fund managers will tend to handhold them, tell them that, hey, this is the best practice. You should learn from this company, how you incorporate the proper structures, how you incorporate, for example, employee stock option programs to incentivize your staff, and so on and so forth.
Thanks. Actually, I want to get onto another topic, and that's also because there's a couple of questions, on the post about shareholder activism and how shareholders can hold management accountable. But first, I wanted to bring up the topic on culture audit. There are these consultants that help with a cultural audit, as it were. And it's a mixture of using online surveys, one-to-one conversations with staff, and it could also include change action plans. And is that something that that companies should do? Because if we are not able to uh, ascertain, the culture and whether the companies are doing something about, changing the culture, improving the culture, then it's also very difficult for shareholders to kind of ascertain whether they should get involved, through the legal structures or through more engagement with the companies. So if anyone has a view on this culture audit and how this can be communicated to shareholders.
I could have a go at it, just to share a little bit of what Capital Land does, right? I would say again, a culture audit is a means to an end, right? We may not call it a culture audit, but I think, most of the bigger companies, what they would do is engagement surveys, right? So it's an internal engagement survey. It's done at regular periods, typically no less than once a year. It really provides a dipstick, right, to how employees are feeling, right? So it is anonymous, it gives a sense of, whether employees are happy where they are, what kind of support they might need in order for them to be able to do their jobs more effectively, what do they hope to see, whether or not whether every single employee we have in the company knows where the company is going. If they don't, then any room for improvement in some of these areas of concern. So it actually does give a good dipstick into the company's culture and the environment. And at the end of the day, if the culture is not right, you probably will see the end result. The end result would be you will have very high attrition rate, for example. Maybe even things like your MC, the kind of medical leave type of situation that could also go up, right? So essentially, you probably will see some of these leading indicators already, before you really even need to do a culture audit. That's really my view.
Anybody else will have any views, on engagement surveys and such, and perhaps even have it reported? I don't think I've seen companies report on their staff engagement surveys. Do you think that's something that can tell much about the company's culture, and would that be useful for investors?
We do report actually. So again, I think it depends on companies. Some companies go beyond and above what is required. So it's something that we do report because it's something that we do annually anyway. So it is reported in our sustainability report. And in addition to that, our sustainability report is externally assured by an external independent party, right? So that gives, it's not so much marketing. Actually, it allows investors to have a certain degree of trust in what they are reading. It has already been independently verified by a third party, right? But I would say that at the end of the day, it's one of many. So that's why I think earlier there was a question of where do you read, what section do you read to look for red flags and all that. It's really not just one section, 1 year. It's actually a series of consistent behaviors that you are trying to get towards, right? So whether it is engagement surveys, whether it is the metrics where employee turnover is, whether it is social equity or divergence in terms of hiring, whether it is participation and what are the awards, given, we do get awards from time to time by some of these independent parties that rank, for example, companies as a great place to work and all that, from independent type of measures. I think all these are all little evidence that investors can rely on in order to get a better sense of what goes on, within the company. I think earlier Melvin also mentioned Glassdoor, and all these are independent parties, right? Because that will give you that kind of a 360 feedback.
There was also a question about attrition rate and whether this is generally reported by companies and whether this kind of can tell you anything about the culture of the company.
I would say it is plus and minus. I mean, people do leave for various reasons, right? If the industry is doing well, and we're fairly big, if we lose our people to other companies because you have better opportunities there and all that, there will be a certain level of attrition, I think, and as well as renewal. Right, because we also don't want a company whereby you have people staying in a role for a very long period of time. Right, so I would say attrition is one. I think the other is management renewal. I do think management renewal is an important measure also. I would be worried if you have a company whereby your senior management has been there for ages and ages, right? Because at the end of the day, it affects the company's ability to be able to adapt. Right. So I think that's the other part that you probably will see a little bit more within companies, bigger companies like Capital Land. There is a proper succession planning. We actually don't keep people in a role for that long a time. It's not that short that it becomes not meaningful, but I think a 5-10 year period in any role is probably the sweet spot, right? Before we look at really management renewal. And it's actually all done very systematically, right? So which means at any point in time, we would know, who are the next, in line in terms of bench strength that we really want to try to groom, such that, we can continue to have that management renewal as well as longevity. Because remember, at the end of the day, I think the best companies are companies that really work towards sustainable growth. Yeah, because market cycles, stock market can be up and down, interest rates can be up and down. All these are macroeconomic environment and challenges that all companies face. Right, but I think the strength of the company to be able to be resilient, to adapt to all these changes, really at the end of the day, you have to fall back to its core. What does it stand? What are the people really standing behind the values that the people are standing behind, the commitment that they fall back on in order to move forward. So it's all, at the end of the day, it's all many parts that will lead to what I call the ingredients that is necessary for building a sustainable business.
Okay, thanks, Serena. I think it's interesting. I think succession planning, yes, true, it could be a red or green flag. I would like to ask the attendees if they have any last one round of questions. So we will be wrapping this up soon in a couple of minutes. While we're doing that, perhaps any parting kind of comments by any of the panelists, if you're after listening to each other as well, in our hearty discussion, do you have any kind of concluding statements?
Maybe I can go first, right? So we heard a lot about the bigger companies best practices and all that, right? For example, capital land, all this that. The way that the smaller listed companies can actually level the playing field is actually through the help of AI. I mentioned earlier about how we handhold very small cap companies, some even less than $10 million on the Singapore Exchange, and if they are able to incorporate the culture of AI, and the senior management will be able to learn, they'll be able to catch up because they then using AI they will be able to prompt and implement best practices that are being practiced by very big companies, right? And if they're able to walk the talk, then sooner or later you'll see gradual improvement in many areas, and that will inevitably improve many aspects, including culture.
Thanks. Who would like to go next?
I think I've spoken a lot on this theme of sustainable growth, but just not to belabor the point, I do think that it is an important concept. At the end of the day, I think when a company does, all their actions point towards sustainable growth, that this is a company that is in it for the long run and not just the next quarter or the next 2 years of results. So I do think that at the end of the day requires many ingredients. Culture is one, corporate governance is the other, being able to engage shareholders clearly, timely, squarely. I think these are all important ingredients that investors should continue to look out for.
Yeah, thanks, Rina. And any other panelists like to comment?
Maybe I'll just, chip in. I think yes, I just feel that it's a big challenge for a lot of our companies because a lot of them are the family-owned ones. And I think it's, succession planning, challenges in terms of growth, having enough money and so on to put in place quite a lot of things. However, I would just say that perhaps I do feel quite positive because I think, they are in Singapore. There is a fairly supportive regulatory environment at this point. I think the MAS is quite keen on getting them to communicate more, to do more. And I think certainly to have that ecosystem of the larger companies such as CapitaLand, I think that does help because it does sort of show the way. It's something that you can aspire to. But I would just suppose sound a word of caution that as quite a lot of these founders and so on, yes, they're slowly moving into that sort of second generation and so on. I think that succession issue is something that has to be managed quite carefully.
Okay, thank you. So there's so many areas we discussed today, and we talked about ESG and succession planning, public relations, legal cases, compliance with CG codes, even remuneration and such. And so these are all areas where investors can kind of look to suss out the culture of the company. And there are also ways they can affect the culture of the company through, I think shareholder activism was mentioned, but I think importantly, engagement with companies, don't let your vote go to waste, maybe attend the EGMs and ask good questions, So a lot for investors to do as well. So we've come to the end of this session, and I hope everyone had a very good, engaging and time. I think the panelists all enjoyed themselves, and I hope the attendees had quite a good amount of takeaways from this session as well. So I'd like to thank everyone for attending, and I'd like to thank the panelists for speaking today.